Solana, SOL, has surpassed Binance Coin, BNB, to become the fourth largest cryptocurrency by market capitalization. Its meteoric rise in the crypto world has caught everyone's attention, with its market cap nearing $85 billion and surpassing Ethereum in key metrics. The blockchain volume on Solana is skyrocketing, indicating its growing influence and potential to challenge Ethereum's dominance. Is Solana going to dethroning Ethereum? But first, do you really understand the core values that Solana has to offer? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation. Here, we break down complex financial concepts using a simple whiteboard format, making learning about investing accessible to everyone. In our upcoming video, we'll break down the essentials of Solana, highlight its standout tech advancements compared to Ethereum, and explore tokenomics to guide you in forecasting Solana's market value. Stay tuned. Before we dive into Solana's technicalities, let's first appreciate its brilliance and the creator behind it. Anatoly Yakovenko penned the initial white paper, bringing his intelligence and a decade's experience from Qualcomm to the table. The white paper might be a tough read, with its complex jargon interspersed with some clear sentences. Interestingly, the name Solana is a tribute to Solana Beach, a place he holds in high regard. But let's get into why Solana is predicted to dethrone Ethereum in the past few months. To put it simply, Solana is incredibly quick, with a block time of just 400 milliseconds. That's a lot faster than Ethereum's 10-second block time and Bitcoin's 10-minute block time. Solana claims it can process up to 710,000 transactions per second, which is way more than Visa's capacity, even though it hasn't exceeded 50,000 transactions in reality yet. But that doesn't rule out the possibility. Therefore, Solana is not only speedy and powerful, but also cost-effective, with transaction fees that are almost negligible, similar to those on the Matic network. Coming up, we'll explore the reasons behind Solana's remarkable speed and affordability. First off, let's clarify Solana's approach to achieving consensus, which is just a technical term for how the network reaches an agreement on the state of the blockchain. Solana moves away from traditional methods like proof of work or proof of stake. Instead, Anatoly Yakovenko introduced a concept called proof of history in the original white paper. It's akin to proof of stake, but incorporates time as a critical factor. Proof of history isn't a standalone consensus mechanism. Rather, it's a method to embed time into the blockchain's data. By using timestamps, we can mark each block with a precise date and time, enabling validators to quickly and efficiently determine their turn in the block submission sequence without the need for constant communication. A major challenge for many blockchains is reaching a consensus on time. Unlike us, computers can't just glance at a clock or the sky to check the time. Instead, the network's nodes, which is just another term for the computers in the network, need to communicate repeatedly to establish a common understanding of time. This process must be completed before they can add a new block to the chain, and in the digital realm, this back and forth can be quite time-consuming. Solana addresses this issue by implementing proof of history. This method allows each participant to timestamp their blocks and provide cryptographic evidence, eliminating the need for all parties to reach a consensus before verifying and approving the transactions. This streamlines the process significantly. Let's take a close look at how proof of history works. Through this following example, imagine you're organizing a surprise birthday party and you've asked your friends to bring different items. Instead of calling them constantly to check when they'll arrive, you give them a specific time to drop off their items at your doorstep. For example, you tell one friend to bring balloons at 2 p.m., another to bring cake at 3 p.m., and another to bring gifts at 4 p.m. They all have different schedules and might take different routes to your house, so their arrival times could vary. But because they've marked the time they left their items on a note, you can easily figure out the order in which everything arrived. This way, even if the cake arrives before the balloons, you know it was sent later and can organize the party setup accordingly. This is similar to how proof of history works, where each transaction is time-stamped, allowing the network to sequence events correctly, regardless of the actual arrival time. Essentially, proof of history enables nodes to continuously send us blocks. Given the variations in internet speeds, we trust that the timestamps they provide are accurate. Once we receive the blocks, we can sort them based on these timestamps before they're added to the blockchain. This streamlines the entire process. Now, there's a little bit more that goes into proof of history, but honestly, it deserves its own video, so make sure to hit that subscribe button if you haven't already. Another interesting thing is that Solana has like 25 blocks being validated by 25 people at once. This is how they're actually able to surpass Visa by such a large factor. In essence, what's cool about Solana compared to proof of stake is that pretty much anyone can be a validator without strict requirements. If you're not familiar with proof of stake, it's worth watching our explanatory video for a better grasp. For instance, to be a validator on Ethereum 2.0, you need about 32 Ethereum, which is a lot of money. But with Solana, you just need a tiny bit of the currency and a daily voting fee. The catch? The fee is currently 1 Solana per day, which adds up to a hefty sum annually. Despite this, nearly 1,000 validators are active, suggesting they might be onto something worthwhile. Let's explore a unique feature of Solana called Sea Level. It's a quirky name for a serious game changer. Validators on Solana can process smart contracts simultaneously, not just one at a time. Imagine you're juggling household chores like washing dishes, doing laundry, and sweeping. Normally, you'd tackle these tasks one by one. But what if you could clone yourself and handle them all concurrently? That's the idea behind parallel processing. And it's exactly how Solana handles smart contracts, making everything much more efficient. Something else I caught on their website was this quote, which describes how they are not bottlenecked by software or ideas, but instead bottlenecked by hardware. Every time NVIDIA doubles the number of SIMD lanes, our network will double in computational capacity. To me, it'll be interesting to see how Bitcoin and Ethereum handle the supercomputers that we have in 10 to 50 years from now. Before we delve into Solana's tokenomics, it's important to note that Solana's smart contracts are quite distinct from Ethereum's. Ethereum operates on a virtual machine system for its Solidity code, whereas Solana utilizes the Rust programming language. Rust is considered a low-level language, which translates to greater power and flexibility, but it also means that developers have to build their applications from the ground up. This prevents them from simply replicating their Ethereum-based projects onto Solana. The trade-off, however, is that Solana's smart contracts can potentially be more robust and powerful. Now, we're moving on to tokenomics. Many of you tune into our videos for insights into how a cryptocurrency or project operates, potentially to inform your investment decisions. Remember, we don't provide investment advice, nor will we ever solicit funds or contact you asking for money. We also won't share contact details like a WhatsApp number in the comments. Be aware of the increase in spam comments. Please ignore them and stay safe. The SOL token is the currency used within the Solana ecosystem, primarily for paying transaction fees. Solana's economic model exhibits both inflationary and deflationary characteristics. It's deflationary in the sense that a significant portion of transaction fees, previously 100% and now about 50%, are destroyed or burned. On the flip side, it's inflationary because Solana has set an inflation schedule where stakers receive around 8% in rewards. These rewards decrease slightly every few days, aiming to reach 1.5% after a decade. Initially, Solana had about 500 million tokens in circulation, and this number will continue to grow due to the rewards distributed through its proof-of-stake mechanism. Regarding Solana's initial distribution, they conducted 4 private investment rounds before their public coin offering. These early stages disposed of approximately 36% of the total token supply at a bargain price of about 25 cents each, a stark contrast to the current price of $200. Additionally, 13% of the tokens were allocated to the project's founders, 10% to the Solana Foundation, and the remaining 39% were earmarked for community projects managed by the foundation as well. An odd discovery was a Solana wallet containing around 13 million tokens with no clear explanation for its existence, leading to the decision to destroy a significant portion of them, an action that's quite noteworthy. It's noteworthy that Solana experienced a 6-hour outage in December 2020. This raises concerns because ideally, a decentralized network shouldn't have downtime, indicating a widespread issue among its participants. Surprisingly, this incident didn't impact Solana's market value, as there was no rush to sell off the asset. Additionally, it's important to remember that Solana is currently in beta, which is crucial information for investors and developers interested in building decentralized applications on the platform.
Thanks for watching, bros. Subscribe and see ya!